A question came up today about continuation divergences, and I wanted to show you a couple now to give you an idea of how to trade these. If you look on the chart over here with the 1375, this is what I'm pretty much watching, getting ready to go get timing on the 333, is that here was a low, there was an arrow here, can't recreate it after I go back, a color change, up goes the price. Now, I'm not always taking counter trend trades just because of an arrow and a color change. You can see there's a couple of them here. But if I'm far enough away from the moving averages, I might. But in this case, I like to wait for these divergences, a lower low on the price, a higher high in the indicator, and the short-term indicator is crossed the long-term indicator. Now, if you don't like taking that one or you're not far enough away, here was 1350 to 1600, that's too enough to take it, that's usually the target. But if you hesitate and miss that and you're clear up here, just wait. Market will go up a ways, it will then do another retracement, white will turn to purple, come down here, and if it bounces off its yellow line, the moving average, even though you're right in the middle, you're still above the green intermediate momentum line, the long-term ergodic, and up you go. And so you get in here at about 16.5 and you get out at 19.5. That's a 3-point move. So remember, this little process in a sense is a little mini Elliott wave, and that's a unique thing about the ergodic. As a triple derivative, it pretty much shows you the complete area. Now, if you get out here, you notice you got out and you're starting to get this topping pattern, all right? And that topping pattern tells you that the market's almost ready to turn over. So in the time it took you to go from here, 9:33 to about 9:47, about 15 minutes, it takes another almost half an hour to get to its ultimate top. So again, now you can look at this and you can say, well, there is a nice divergence from here to here, disregarding the center one, even though it's pretty close, and now you have a target to go down to the moving average again. But whenever the purple turns and is under its yellow line and the short term is under the long term ergodic, you've got a pretty good down swoop. In this case, we had 22 to 17, about 15 points. Then it bounced around and deteriorated. This was lunchtime. So I hope this helps. It's just another way to look at the market. And remember, you're constantly getting these 1, 2, 3 moves.